Welcome, friends, to the next edition of Markets and Investments. So, what are we going to talk about this month? I'm principally going to talk about two things. As we come to the end of the first quarter, we will talk about the amazing resilience of the Indian markets and how they have done in relation to other markets in the world. And where does that resilience come from? And secondly, we will talk about India's IT sector because there has been a lot of talk about the recession in the US and what possible implications that might hold for this very important sector. It's also a sector where we have a significant investment in our portfolios, and hence it is important that we discuss what our view, given the kind of scenario that we might see over the next 6 to 12 months, and why we continue to be bullish on the IT sector. But to begin with, you will see that the broad markets had a very deep correction in April and May, and also in the first half of June. And the markets have corrected this year, but in relative terms, the Indian markets have actually outperformed not only the MSCI Emerging Market Index, but also the Asia Pacific Index and the developed market indices. And we all know that despite significantly heavy selling by foreign institutional investors, the Indian markets have held up reasonably well. Obviously, one well-known reason that is often talked about is the fact that domestic flows continue to be resilient, and that has largely absorbed the foreign selling. But our view is very, very different. So if you look at the chart of the Nifty 50 as compared to the MSCI Asia Pacific Index, the MSCI Emerging Market Index, and the MSCI World Index, the Nifty continues to be, or the Indian market continues to be, the strongest and the most resilient so far. It actually outperformed in calendar year 21, and even in the first half, despite the corrections that we've seen, it continues to outperform on relative basis in the first half of 22 as well. And in our belief, the reason is not just domestic buying, but the reason is that we have not seen a significant downgrades to earnings estimate despite the macro challenges that we see in front of us. And we've had several challenges, starting with the war between Ukraine and Russia, which led to a massive reflation in energy costs or oil prices, which continue to be elevated. We also saw challenges on supply chain as a result of the war. And now we are talking about the action of several central banks in raising rates, including the RBI. And there is a talk of a potential recession in the US and some of the developed economies. And despite all of this, Indian earnings have remained very, very resilient. And we believe that that is one of the most crucial reasons why the Indian markets have held up. So if you look at the chart of 1 year forward earnings estimate, you will find that all the other markets have seen a substantial cut in earnings estimates. And in India, as I mentioned last month, after an initial small cut, the earnings estimates have remained reasonably resilient. Obviously, we will get far better understanding of where the earnings stand after this first quarter results are out, which will happen in July. and we will talk about it in the next month's video. But our contention is that we still believe that there may be very minor cuts to earnings in India. In fact, we do believe that if oil prices indeed start to fall and commodity prices have already started to roll over, and we are also seeing many of the supply chain issues slowly getting resolved, I think that some of that will actually get compensated. And let's not forget that more than 50% of the Nifty earnings come from global earnings, and some of that could also get benefited by the dollar rupee being at almost 79 plus levels. So the exporters will actually gain as a result of a depreciating rupee. And therefore, our confidence in the market stems from the fact that in India, after a long period of time, we are experiencing strong double-digit earnings growth. And it is not just liquidity, but it is the strength and the resilience of the India's earnings growth story, which is the main reason why the Indian markets continue to outperform most other relative markets in the world. Coming to the second point of discussion this month, which is IT services companies. Now, as you know, that this year the IT index has corrected the most, almost 25% from the top. And what is being baked is that there is a fear that there could be a recession in the US and some of the other developed markets in Europe, and that might lead to cut in IT budgets and a slowdown in IT revenues going forward. But let's look at what our experience has been of past such cycles. And if you look at the data from 2008-9 global financial crisis, you will see that in calendar 09, tech spending did dip, but thereafter it recovered. However, what happened during that time was that outsourcing actually increases when those economies face a slowdown. So what happens is that when there is a slowdown in the developed markets of US and Europe, which is where almost 80-85% of our software companies sell their software services, is that those geographies or companies in those geographies tend to cut costs. And one sure way of cutting cost is to outsource more. And that is the trend that we have seen. So if you look at the chart that we have put out, you will see that India's IT sector is actually a net beneficiary when there is a slowdown or a recession in the developed markets, because we see a lot more outsourcing. And if you look at India's outsourcing in calendar 8, it was 6%, which is India's outsourcing as a percentage of global IT spending. And it has consistently moved up over the last 12 years. And in calendar 21, it actually moved up from 6% to 15%. So our belief is that as the pressure on companies in the developed markets increases, there may be some slowdown. Yes, maybe 2021 was a fabulous year for IT growth, and there could be some mean reversion. But if you look at it from a long-term perspective, then the story in the past has been that Indian IT services industry has actually always gained market share during such phases of slowdown. And the recent results of Accenture, which is one of the large IT company which competes with the likes of Infosys and TCS, if you look at their commentary and the order book, you will see that Accenture's order book is at an all-time high. We spoke to a lot of IT service companies in the last few weeks, and none of them are experiencing any significant cutbacks in order inflows or demand for IT services. Having said that, do we believe that there could be a potential slowdown in the second half? Maybe there could be a slight slowdown, but usually we've seen that that slowdown doesn't last for more than 2 quarters, and thereafter actually outsourcing significantly improves. And we believe that tech spending is indeed in a structural growth phase, and that our IT industry will go from strength to strength. Having said that, a large part of our exposure is in ER&D companies, where we believe that growth will be far more resilient than a typical IT outsourcing services. And therefore, we believe that this is a sector that we would want to be invested in from the long-term perspective. Some of the slowdown impact, again, for IT services will be compensated by a weaker rupee. And therefore, the current thinking that there will be a significant slowdown in IT growth, in our belief, is not founded in past data that we have seen of similar cycles. And therefore, we will continue to have a reasonable exposure to IT service companies in our portfolios, and we believe that there is nothing to be significantly worried about. And just like we've seen that, the fear of inflation lasted for 2 or 3 quarters, and now we are seeing that, in our view, inflation has peaked. Many commodity prices have corrected significantly, and now the fear moves from inflation to recession. And we believe that in a couple of quarters, we might see that the recession may just be a technical recession, may not be an actually full-blown recession, or we may not have a recession, right? So it is unlikely that we will significantly change our allocation to IT services just because the narrative keeps changing for a couple of quarters and the data does not support such a hypothesis. So with that, we end this month's communication. We will come back to you next month. Hopefully by then, the earnings season would be in full blow, and we will get a far better understanding of how India Inc. is performing in Q1 despite the challenges of higher raw material prices and currency depreciation. Thank you. Until next month.